Hilton brings you new ways to stay, with experiences that let you capture the glory days. Introducing the Graduate Hotels. Each inspired by local college towns, these stays are always original and never boring. Get in touch with traditions all across the country and enjoy a stay that's a class above the rest. Book at Graduate Hotels with Hilton Honors Points at Hilton.com. It's a win-win. Hilton, for the stay.
Reality radio for a really great future. We're talking real money.
Yeah, you always have to be aware of whether the camera and the mic are on or not. Hi. We're aware it's on. Hey, everybody. I'm Don McDonald, and I'm here to talk real money with you, as is the inimitable. Ooh. It means unable to imitate.
Yes.
Because who'd want to?
Exactly.
Tom Cock.
Exactly. Yeah, no one. You think anybody wakes up in the morning and says, I can't wait to be Tom Cock today?
Tom Cock.
No, I don't think there's a long list going out the door for that one. Sorry.
Yeah.
Right.
I don't know if I'm going to be able to take care of the color difference in post, but Tom's really yellow. I'm really red.
And there's no jaundice involved, and I'm feeling fine, so leave it at that.
You're a little yellow.
I don't
know why your lighting is yellow today. You redid it. He redid his office.
Yeah, I cleaned it all up. Yeah,
he cleaned his office.
No, I unloaded like 200 books.
Did you?
Uh-huh. Yeah.
Did you reduce the enemy aircraft?
No, the aircraft remain. The books go. So there's a message there somewhere. I don't think it's probably good.
Yeah. So, again, he remains in the Museum of Modern Military Aircraft, the MMMA, the MMMA.
Or, as we like to say, easier to say, let the bombing begin.
Yeah, it's Tom's childhood fantasy, his little airplanes playing. And he does. When he's done, he just flies them around.
No one touches those planes.
Okay.
All right. Even my
grandson. We're going to be serious now.
Okay. This is it.
We're going to get serious.
This is a good show, by the way. This is a really good show today. Yeah, it is.
He thinks it's a good show.
I'm sure of it. Positive.
He thinks it's a good show because it involves a piece of paper that actually came to him in the mail.
No, it came to somebody else. Someone gave it to me.
Or to someone else. Mm-hmm. A something that actually looks like a newspaper.
Oh, yeah.
It's not an artifact from the 1980s.
No, it's more recent than that.
It's more recent than that.
Last fall.
It is. Show the folks the lovely paper and change your white balance.
Ready? Huh? How's that?
Go back a little bit. I can't see the whole screen. Okay. Oh, yeah, because I can do widescreen on you here. Investors Journal.
Yeah.
Wow. Is that like Investors Business Daily?
Oh, very close. Very close.
Slept with the Wall Street Journal or something?
Yeah, it's written by a guy named James Dale Davidson. You know the name?
We all know James Dale Davidson.
You don't know him? He predicted the fall of the Soviet Union.
He
predicted Trump's election, and now, by the way, he's predicting the collapse of, quoting here, the world order. I don't know
There's
which
a world order. It seemed like disorder to me.
I don't know which part we're in, but we're not in. James Dale Davidson, the editor of Investors Journal.
Okay, I see him right here.
Yeah.
Wow, he's got pictures of himself going back like 50 years.
I'm going to use one for myself 50 years ago.
The mastering the transition to the he's written some
Okay,
stuff.
but why are we talking about Investors Journal?
I have no idea.
Okay, well, I'm going to tell you that now. If you're ready for me to go, I'll hit it.
Okay.
I'm
good.
So this was given to me by a client who received it in the mail. So while this looks like, and by the way, if you can't see,
is somebody calling you? Do you need to get that?
Apparently I'm very popular, so I'm going to decline that. Okay. So if you can't see this, you're only listening from the audio version. It's Investors Journal. It's 20 pages. 20 pages, all on one topic. One topic, Don, which is a very important topic to us all. What is that? What is the one thing you got to have?
Sense of humor.
In this program, in this life, pretty much. In this disordered world, yes. But in this case, today, we're going to let that sense of humor go, which is wonderful.
A nice dinner.
Very, very. which I hope you got one coming up with your birthday soon.
Or
Yeah. Waza. Yes, the water. This is 20 pages on water, but not just water. We're talking WTER. Yeah. Where you
WT? Wait, that'd be waiter.
Okay,
nice
well,
dinner.
bring the check. WTER. It's a NASDAQ traded stock, and this is 20 pages. And it's not just any 20 pages. Look, if you're on go online, you can see the picture. It's a wonderful picture of Shaquille O'Neal and a very short white man next to him named James Cramer. Jim Cramer, maybe you've heard of him from CNBC, which suggests some sort of endorsement by the two of them. WTER, because this is a breakthrough water, Don. This is alkaline water. This is cutting edge.
Yeah.
And this is a newsletter telling you, guess what? Why you have to buy the shares of 20 pages. Oh, there is a coupon to actually get some of the water, I guess, at a discounted price. But 20 pages. And so here you are. This came last November 2021, when the stock was trading at a mere $2.35. Mm-hmm. Getting a lot of shares for $2.35. It's not like Amazon that was whatever, 4,000, whatever it was. That's the good news, $2.35. But apparently the endorsement of said celebrities, Shaquille O'Neal and Jim Cramer, well, it didn't help a whole lot because the trade closed yesterday at 42 cents, which I think is like, I don't know, decrease of, is that like 80%?
It's a lot. I would just call that a lot.
It's significant. Let's put it that way. So, Mr.
Yeah, I'm looking at its all-time chart.
Yeah.
Dating back to, apparently it was really hot property back in 2013 when it closed at $29 a share.
Yeah. Well, you were drinking more water probably back then.
Apparently, and they keep flogging this dead horse, and nobody along the way has ever really made money. It's just not happening. This actually has a bit of a whiff of scam to it, the lovely aroma of scam.
Well, I think you can truly say this is a trade that is not water under the bridge. Pardon the poor pun.
You think the firm might be washed up?
I was going to say this has been a complete wash out. Anyway,
wash out. Okay. Well, thank
get
you.
rid of all those. And thank you, by the way. I happened to hear the podcast yesterday where you had the shout out to me with the bad dad jokes. I really appreciate that.
We gave you a little segment there.
I'm being completely honest. I appreciate it. Yeah. Why are we talking about this? Because we don't talk about individual stocks unless we have to. We don't buy or sell individual stocks unless you want to tell us some reason you're in one, and we'll tell you why not to be. We're talking about because this is the newsletter industry. This is an outrage that they can write this garbage that Mr. Davidson has been so smart in predicting all these amazing, including the collapse of the world order. But if you're a newsletter reader, should you follow the advice of someone writing a newsletter? Now, there's one guy that used to study all these newsletters and actually tracked all their predictions and wrote about them, I think it was monthly. He still writes. But
Holbert Financial Digest.
Yeah, he still writes, but he doesn't write about the newsletter industry per se. But his overall take was, you're not going to know in advance when the water's rushing out of the trade because they don't know in advance. Some of them got lucky, and you might get the right newsletter for a period of time, but over the long haul, that they don't know anything more about the future than an actively managed mutual fund, right? Number two, the writers are doing what? Look at this headline. Shaq triggers new big beverage. It's all about the headlines here. It has nothing to do with the content. The idea here is to get you in, get you excited, and buy you that stock at $2.35 before it decreases down to 42 cents.
What about those who bought it at $28 a share?
Well, they're hoping that somebody else is going to come in and bail them out, I guess. Oh, can we say bail out? So get the water out of the boat.
Because to get the water out? Yeah, no, I got that one.
Too easy. So newsletters, they hide behind. There's a certain amendment, I believe, of free speech of some kind that they say they can say anything they like because
it would be the very first amendment to the Constitution of the United States of America.
The First Amendment allows them to write these outrageous claims. And by the way, they all claim that they're the number one newsletter. That was the other thing that Mark Hulbert, I used to love reading. He'd say they weren't number one. Sorry, they could say that, but they're not actually number one. So no, you shouldn't pay attention to this fella, and you shouldn't pay attention to newsletters in general because they're bad for your financial health.
Well, yeah, because they can't do what they claim they're able to do. And I'm going to get to that in a minute. But a little aside, maybe one of the reasons that alkaline water isn't doing so well
Yes.
is because for centuries, people have been making their own alkaline water with a substance called bicarbonate of soda, a.k.a. baking soda.
Yeah, you just put that in
You put
there.
a little in water, and guess what it turns the water? Alkaline.
Which is has some
Simple chemistry.
health benefits, correct?
I just drank the studies on coffee.
Drank the flat.
It's just,
Yeah, one day it's
coffee is great for you. No, it'll make you die.
Yeah.
It'll make you live forever. No, it'll kill you. Who knows? But it's all some trick somebody's trying to utilize to make a lot of money. And this sounds like a pump and dump from way back, but I'm not saying it is. I'm just saying it feels like.
Well, I'm
me.
waiting for the pump because the dump is already on, dude.
Protected opinion, ladies and gentlemen.
Yeah?
But and by the way, I did look the guy up.
Yeah,
He's
Mr.
one of the
Davidson?
He's one of the founders of Newsmax.
Oh, good Lord. Okay, that makes sense. Yeah, which has
Anyway.
basically gone away, I think. I don't even know.
I don't know. They took him off of DirecTV, I
Oh,
think.
well, that's that.
That's all they had. Oh, I know where I was going.
Yes.
Okay, let's talk about one of the most famous newsletters, investing newsletters of all time. It was still called the Value Line Investor Survey or something to that thing. It's an
Value Line
investing
Investors.
newsletter.
Yeah, sure.
Yeah.
Yep.
Yeah. So they have claimed for a very long time that if you bought their recommended stocks, recommended in their newsletter, you would have beaten the market because they recommended them and then they went up. There's a flaw here in their reasoning, and they actually proved the flaw in their reasoning for a while when they had the Value Line Mutual Fund, which they wisely decided to stop. Because when you looked at the Value Line Mutual Fund, you found a mutual fund that performed almost exactly as well as the market, less the fees. So it underperformed the market because of the fees. Yet Value Line Survey claimed that you would make more money if you bought their stocks. But here's how this works. It's a simple little charting thing. You have the Value Line Survey that comes out. It's printed. This was back in the old days when it was printed and mailed out to people. Now, that's the day on which their recommendation starts counting.
Yep.
Okay?
That's
we
the
came
moment.
out with it. We distributed it to the public.
Yep.
Now, you live right next door to the printing plant, to the mailing service that mailed out Value Line Survey. So you got it the next day. You were able to trade right away. Or wait, maybe you were a big Wall Street trader and you made a deal with Value Line to pick it up right from the shop, right from the printing press.
Actually,
the day it was released.
There was a fraud once where somebody went into the printing press, got the trades before that, and traded on that information.
I think that was with Business Week.
Yeah, I remember that happening. Anyway,
Yeah. So here's what happened. The people who got some special subscription, possibly, I'm guessing on that one, but if you were close, you got it first, you may have made some money. You may have bought right at the beginning and bought it right away. But remember, stocks have a limited supply of stock. There is not an infinite supply of stock. And when people start buying it, and they had thousands and tens of thousands of subscribers, when people start buying, what happens to the price?
it goes up. I believe they call that in our business front running.
Yeah, but this is legal front running.
This isn't telling your clients that they need to own this after you already own 8,000 shares of it.
Right, because Value Line is saying we're not making anything on this.
Yeah.
So they're just providing the data, and then they're using that data that is self-perpetuating. Because people believe, they make good guesses, they buy those guesses, they propel the price higher. But the longer-term investors, the ones who bought in later, paid those higher prices, and therefore their net returns, well, in many cases, they probably look a lot like the returns from Kathy Wood's
I knew you
Ark
were going to
Innovation
go there.
Fund.
I was like, isn't that what happened to basically every person who bought the Ark
after 2020?
after the water washed away from? Okay, I guess we could.
Oh, we got water and Ark
Okay,
now.
it's too
Again,
easy, yeah.
another water thing.
Pretty easy.
But the reality is, you're not going to be one of the people. And this is a place where this is really, really, really well illustrated is the AARP's newsletter, which is, what do they call the stocks, Tom?
Now you're
They
talking
call them something.
AARP or AAII?
Oh, I'm sorry, AAII.
Yeah, okay.
I misspoke. The American Association
can
of
we say
Individual
it?
Investors.
Can you have a senior moment while talking about a senior
I
organization?
did. I had a senior moment when talking about. Anyway, what did they call the shadow stocks?
Yeah,
That's what they call them.
exactly, yeah.
Shadow stocks. Their definition of shadow stocks are small, lightly traded companies. Well, folks, a small, lightly traded company, if Tom and I bought it right now,
And told
a small,
you.
lightly traded
Yep.
company, and told you, the price would go, no, it would go up just from us buying it.
Good point.
Because some days these lightly traded stocks don't trade at all. So if somebody comes in with a couple of thousand shares trading, the price jumps right up. So they really create this small cap tsunami that makes them look good, and they can make incredible claims, but doesn't translate into returns for you.
And what is the float on WTER? I mean, I bet it's small
that is a
too.
really good
because
question.
even as big as Shaquille O'Neal is, he can't probably move the market.
can't
on
reach
that.
it.
He can't reach it. Yeah. Okay. Yeah.
Yeah, he can't. Okay. WTR.
You might want to actually, after this trade, throw him a life raft. No. Okay. I'm gonna keep coming, but
Where's Jason Gay when we need
yeah,
him?
that was funny. The
His joke was funny.
satisfactory. I like that one.
Yeah. Where do they make average things? The Satisfactory.
That's a good one. I gotta
That was a
remember
good
that.
one.
Yeah.
That isn't even a bad dad joke.
No.
That's a really good
Funny.
one. The market cap on water, WTER, is $49 million.
Wow.
So that's a lightly traded stock.
Yeah.
And its daily volume, is that 858 shares?
No.
looks like.
What?
I'm looking at its average daily
Let's
volume.
buy 1,000 a day just to see what we can do to it, sport. Just for the fun
Exactly.
of it.
You're going to move the stock.
Let's just do it just for the fun of it. Do we have to tell headquarters in advance or not?
Yeah, I don't. No, you can tell them after the fact.
Okay. So
You just have to put it down.
I'll
on your
swing
form,
half of it. You
your
swing half of
disclosure.
it. What do you say?
I am not buying water.
You buy it every day. You just don't know.
No, I don't. I get it from my refrigerator. I don't even.
There's a cost to that. It comes from somewhere. You're paying somebody for it. You think your refrigerator comes up with water? Think it's
Yeah.
condensation off
Isn't
the
that-
stuff or something?
Wait a minute. Isn't that how it works? Isn't it magic
Wait,
water?
I'm getting it from the government. I'm not getting it from you. Well, it turns out I pay the government, then they send it to you. Do you get the whole process here? Yeah,
Yeah.
you are getting it from me.
Actually,
That's
yeah,
be
okay.
wrong.
I don't pay a lot. For
Okay,
water.
there's a difference there.
I do pay for water.
Yeah.
I'm not paying for WTER though.
All right. Well, I was all excited because we could have really.
I think
Turn
that's
them
what
on.
this says.
Wow. That's
Yeah.
and by the way, that's just for the record. What'd you say the cap was 50 million? That is a
50 million.
very small company. Not the smallest, by the way, because I just went through a list of the publicly traded companies in the Northwest, and there's some market caps that are like $10 million for publicly traded companies, which seems crazy to me, but I don't know why they would go public at such a size. But anyway, for whatever it's worth. So the newsletter business, please don't follow the advice of James Dale Davidson or others. And by the way, Mr. Davidson, just so you know, my world order is still intact. Just putting that out there.
I still don't even know what he means, folks. I'm sorry.
Me or him?
I have no. You.
Well, he's the
I
one.
have no idea
He's
what
calling
you're
for the
talking about.
collapse of the world order. That's I
Well,
quote.
what?
That's his
what,
quote.
what do
I
you mean
didn't come up
your
with-
world order? You have a world order?
Well, in my little room here, this is my world order. So Don't try and blow it.
Little playland.
Exactly.
All right, here we go.
Yeah, question.
It's question
yes,
time.
Please do.
Questions
I missed
sent
it
in
last
at
weekend. Yeah.
talkingrealmoney.com.
Okay.
Okay?
Yep.
Okay. You ready? When to rebalance is the topic.
Yes.
Gentlemen. Really, I'd let you pick which one. I have a question about when to rebalance. My wife and I each have about $900,000 in IRAs and $650,000 in a brokerage account. We are retired. With the current drama in the stock market, my accounts are no longer 60-40, but closer to 50-50. When is the best time to get back to plan? It seems nervy to let go of bonds as they are the only bright spot in quarter two.
Yeah, they're not. They haven't gone down as much as they went in quarter one. I haven't seen the numbers actually for the quarter.
Yeah, I mean, but compared to the previous quarter, that's a bright spot.
So if you need a rebalance, you can do rebalancing one of two ways. Basically, you could do it on a set date. You could annually. You could just say every year I'm going to rebalance. That's one way. And by the way, if you're drawing on the money, then that's an easy time, right? You rebalance, take the money you need, go back to the correct percentages. We rebalance our accounts basically every day because the computer every day is saying this is out of sync. And it starts with the stock to bond ratio, right? So you could have, sort of a guide. Say, well, I'm going to trade if my 60-40 gets 5% either way. In other words, if it gets to 55%.
And he's gone 10.
Yeah, which surprises me a bit because both stocks and bonds are down. What I was going to say is it's been an unusual year for rebalancing because normally when stocks are down, the global portfolio is still down 13 or 14%. Bonds would have been up a little bit, but because we've had these interest rate hikes, that hasn't been the case. So you would have been selling bonds and buying stocks. It sounds like you'd be doing the same. No, he's back to a 50-50, so he's going to buy more stocks. So, yeah, he'd be selling bonds and buying stocks, and that's going to be easy in a qualified account like an IRA. You're just simply going to make those trades. You're not going to have any tax ramifications. It also gets trickier with a taxable account because you don't want to be doing a lot of activity there that's going to create you sending money to the federal government. So, important.
But if he's selling bonds, even in his taxable account, and buying stocks, the bonds are bound to be down because bonds just don't fluctuate very much.
Which brings me the other point I was going to say is this is a good year for tax loss harvesting. So you could, in the taxable account, be selling some things, harvesting those losses for use later. I think we once had a chief executive who had $90 million in carry forward losses or something. But anyway, so you're never going to pay taxes again. But so you might want to do that. But yeah, I'd say either sort of annually or have a percentage difference that you're saying once it reaches that, I'm going to make a trade. I think those are two pretty easy ways to do it.
And thanks for your question. Now, remember, you can call us with questions at 855-935-TALK. The bulk of those get answered on the Friday Q&A show. You can also send them in at talkingrealmoney.com, but you can type them there or you can record your questions there, which is really helpful. So take advantage of that. And if you really, 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 really need some serious help, more than we can provide in the few minutes we have here on the podcast or the video cast or the whatever cast, go to vestory.com, Vestory.com. Vestory by Appella. That's a firm that Tom and I are a part of. We used to own it. Now we own part of it. And we have, since the inception of this lovely little firm, which is now huge, been helping people with their financial issues for free.
It's not huge. Is it huge?
Oh, it's almost $1 billion.
Okay, that's fair. I mean, I guess for
us, for me, that's huge.
Yeah, I know. It's like when you ask people how much is rich, right? Oh, I don't know, $200,000.
It feels pretty darn good to me.
It's been great.
That was my goal when we started the firm. I said I would like to get the firm to $1 billion assets under management.
Yeah.
I'll be happy.
I think you'll be happy. And we did it before with Merriman. We grew that one by $1 billion. So we'll be the $2 billion brothers. Huh? By the way, that's it. We're not doing it again.
No,
just for the record. Just so you're clear on that.
See how old?
Just to be clear on that. Not going for $3 billion. Sorry. Oh.
Yeah. So anyway, go to vestory.com, set up an appointment with one of our advisors. You can even Tom has a Saturday morning offer until his Saturday mornings get too crowded, where he will actually meet with you.
Yeah, I love Saturday mornings.
He loves his Saturday morning meetings.
I do. So sign up. Let's get together. Let's
so
chat
you can
it
sign
out.
up.
Yep.
And there'll be no high pressure sales pitch.
No, we
Guaranteed.
just talked to 2 people the last week. Don't need our help. Made a few changes in their portfolio. Sent them on their way. So I'm
And they're happy.
Fix the plane and get on with my life. So
Did we have
you know the plane?
Did we have a casualty?
You know the plane?
You got to hold it still. That's a P-51?
No,
No?
it's a Corsair.
I don't know.
Bent wing Corsair.
I have no idea. What was its letters?
I don't remember. But this is a Navy World War II.
Oh, it's Navy.
You see the reason, and you know the reason it had these bent wings?
We're going to find out, aren't we,
Yeah, because
folks?
for carrier landings, it needed to get this propeller and everything down. It had to have those wings designed that way. Pretty cool. There you go. Now you know the rest of the
Another
story.
fun-filled
You want me to start
model
going through the rest of the
aircraft
planes? We'll be
facts
here a long time.
from the Model Military Aircraft Museum, or the Museum of Model Military Aircraft, MMMA.
Let's hope not for a
The
fire.
sponsor of Talking Real Money, the podcast videocast.
'Cause no one
from
else will.
Everyone at the MMMA Museum. Schedule your appointment online at the Museum of Model Military Aircraft.
It's only been one person ever came in here, by the way, and said, I know this plane, that, like 5 planes. And he was 10 years old. So.
Well, they're supposed to come there to learn,
Okay.
not to know.
Okay, fair enough. Like this show.
It is
I
to
get it,
learn,
right?
like
Sure.
yeah, you're not supposed to know.
Okay.
All right, we're leaving.
Bye.
We're leaving. We're de-podcasting. We're decoupling from the space, and we're going over there somewhere to do another podcast. Hopefully, one that you'll like this time. I'm Don. That's Tom. Talking Real Money.
We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately and consistently predict the future, so past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Apella Capital, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. That should keep the lawyers happy.